Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's keep going with our analysis on the gold market, our trading plan. So actually, as you can see on Friday, we do not have really big changes since trading session was relatively clear and really quiet, so it makes no impact on the overall picture that we have. So in today's weekly report, guys, we talked about the nature of this action that we see on the gold market. In a cross-market analysis. So here we see some features that are not typical for price behavior on different markets and at the same time. And it makes us think that something really greater stands beyond on the background of this action. This is not just some occasional price action, something that could be represented by the inform agencies as some investors' warnings on the United States-China agreement that something that's really happened there, so some bad, poor statistics or something of that sort. In general, guys, all recent news and events that have happened mostly are negative for gold. You could take by yourself statistics in the United States was really good in recent 2 months, so the resulting statistics of this year. Fed is promised to keep rates flat. Now, no cut them, no rise them. The current level is already a million times what was priced in the current gold ratio. Agreement has been signed, so the problems in the mutual trading and the global trading should be resolved. What are the reasons for the rally on the gold market? So nothing, from that standpoint, it should be no significant reasons. That's why we think that here could be some natural cross-market money flows. Because through the whole year, we said that stock market currently is not an objective to make the long-term investments. That was our view. Yes, it has risen significantly, but it doesn't mean that risk does not exist here. So for me personally, in this year, I was not investing in the stock market. And currently, we think that market is strongly overbought. In this rally on the gold, it could be early sign of the possible coming reversal on the stock market, because gold market should not rise together with the stock market. And this action could be just the first sign of this possible change that we could get. Second suggestion that why this rally could be is that investors maybe know something, these big investors maybe know something about impeachment procedure that stands, about some risks of further stage 2 United States-China negotiation, or in general they treat those overall global risks as high and keep significant position in the gold market. That's the only explanation that we could make currently on the situation. So putting all this fundamental discussing aside, speaking on pure technical picture in the short-term perspective, we suggest that the upward action should continue. If you remember, our initial plan suggests that we should get some position on retracement on the conference. When we saw on the 24th on December, right before the Christmas, this rally that has happened here, this was the conference resistance actually, and we said, well, maybe market will show the pullback and we will take the position on this, because recall what we said about the gold price in euro. Here we have really bullish view on the market. It's the shape of the pattern on the gold market in euros a bit different compared to the gold market in dollars, and it shows really better, more clear bullish picture than this chart. But anyway, we thought initially that we will be able to take the position on retracement down from this level. But market was really strong and has broken through this confluence, and now it stands at the next resistance, 1514 area. This is really very important level, guys, by many reasons, especially due to the patterns that we have on the weekly, because on the weekly this stop at the C point of large ABCD pattern. Once market will take it out, this pattern will be erased. This level, invalidation level for a double repo sell pattern that we have on the weekly. So breaking of this level suggests that we will get double repo failure pattern. That it will be quite different tune. It will suggest the taking out of the stop. So that's why 1514 is very important. But still, currently, it stands at the agreement resistance. And that's the next object to keep an eye on. So for the daily traders, the situation hasn't changed. We are watching for a pullback, healthy pullback here, where we could consider the taking of the long position. Currently, I would suggest it should be somewhere around 1485, 1490 area, maybe approximately this natural line, support resistance area of the B point and so on. So another reason why I think so is because, guys, here we could recognize kind of the head and shoulders pattern. So it's very typical right now in the modern market that you have head and shoulders not only on the bottom, I mean reverse pattern, but on the top as well. And that's the reason why I suggest that this retracement should be deep enough to form it. Besides, as you know, we have broken through the confidence resistance without no actually as it no exists, and it's very often leads market to retest this broken confidence but from the other side. So this broken confidence will be work as a support. It stands approximately at the same 1480 area. That's the suggestion conclusions that we could make on the daily chart. So on the daily, we're waiting for a pullback. If you trade on the intraday charts, you of course could consider taking the short position right from this resistance with the stops above this area, approximately the targets that we have specified. And the patterns that we have here is perfect double repo sell pattern. So actually we already talked about it on Friday, but on Friday we were at this point. What we have? Perfect thrust down from thrust up, close below the 3x3, close above, and creating the new top, and second close above. So guys, I do not treat this close as a confirmation of the double repo, because on this action we haven't got the new top. So the specific of the double repo, it should have the features of the capitulation of the bear. So that's why here I step out a bit from the theoretical rules to recognize double repo. But Judd Napoli, you need to get close below, close above, and close below. And by the theoretically here we should get the confirmation. But just my experience, guys, tells that this is the real second top of the double repo. You can see kind of the wash and rinse of these tops, and then sharp drop below. So this is major top that's important for the pattern. That's why the confirmation of the double repo we've got at this point. But anyway, well, it doesn't change the core. The double repo pattern is confirmed, and here we should expect for a downward continuation here, deep retracement. On this chart, personally, I like this level. So 1488, 1490 is a good target for a double repo. 30% support of the whole upward direction, 1488. 1496 for support of the thrusting action. Well, this will be significant enough to complete the target. And take a look also, guys, this level approximately corresponds to the bottoms of this potential left bottom of the hand and shoulders pattern. So that's why I think that this was the most probable target of this downward action. So that's our view on the gold. Daily traders wait for retracement and consider the trade and consider the possible taking long position somewhere around 1480, 1490 area. Intraday traders could consider taking the shorts with these approximate targets based on this pattern that we have.